This is CGTN, China Global Television Network.
Hello and welcome to Dialogue. As China reopens its borders after nearly 3 years of strict COVID restrictions, how are other countries reacting? How will easing restrictions impact domestic and international business? And what will it mean for the global economy? To take a closer look at these questions, I'm glad to be joined today by Hannah Ryder, founder and CEO of Development Reimagined, Rick Denham, former White House correspondent for Business Week, and Chen Jiahe, Chief Investment Officer at Novem Arcade Technologies. That's our topic. I'm Xu Qinduo. Welcome to the discussion. Hannah, I will start with you. As China fully opens its borders to the outside world, so what does the rest of the world expect out of the second largest economy in the world? For example, from where you are sitting, European countries, what's their expectation, or what are they reacting to China's reopening?
Well, I think there's some mixed expectations and a little bit of lack of understanding as to what China's impact will be. I would say there is important impact for African countries as well as the rest of the world in terms of China reopening, having an impact on the rest of on growth for engaging, especially with people-to-people flows, more trade, being able to move between different countries. Obviously, there are a number of countries who have relied very strongly not only on Chinese tourism in Europe, but also Chinese students, for example. So that, of course, the resumption of that will be significant in 2023. And then, of course, there'll be the question of can others also go into China and how quickly they can. Let's see.
Mm-hmm. It's about how quickly we will restore or we will go back to the normalcy. So Rick, you are part of the movement actually. You are just back to Beijing from the U.S. So you are coming back to normalcy. And what's your observation?
Well, I think I was one of the last people in quarantine before the quarantine ended, but I know my wife, when she gets here, will be very happy she doesn't have to go through there. I think there's a big change going on at the level of students and the level of Chinese nationals who are abroad. I know a number of students from Canada, from Vietnam, from other cities, other countries, who have gone back home, who are taking advantage of the free travel. And there are people who are planning. I only have two of my students at Tsinghua University in global business journalism are still outside of China, have not yet arrived. So I think that in terms of families, of people who are coming back, either visiting their home countries or coming to China, it's great. In terms of economics and tourism, business and tourism, I think there's a wait and see to see what happens with the current wave of COVID, which seems to be subsiding in China a bit before there's going to be, I think there's a lot of movement. And one last thing, I think a big change will be when the Chinese Foreign Ministry starts handing out visas more freely for businesses and for tourism. I think that will unleash a real pent-up demand for travel to China.
Mm-hmm, for travel. And if you look at the expectation, Jiahe, for example, Goldman Sachs said China stocks may rally another 15% this year, and the Chinese yuan may continue to be strengthened, may even hit the levels last seen in April. And Goldman Sachs, and also I think is another. Morgan Stanley joins Goldman Sachs in the bullish call about the Chinese economy. They expect the Chinese economy to grow in 2023 more than 5%, actually 5.7%, much higher than the previous consensus of 4.8%. What do you make of that?
Well, yeah, I mean, investors, well, like me personally, I'm an investor in both the Asia and Hong Kong market. We've been fully investing in equities. And most of the investors do believe that these movements in recent months will definitely bring a very promising result to Chinese economy in the coming year. I mean, look at the stock market. It has already been rebounding by about 2 months since these measures have shown the sign of relieving, because these kind of things will mean many things to our economy. First is that the cost of blocking or people at cities from cities will be reduced. That will be a significant reducing of the cost. I mean, these things really do cost billions of RMB to lock down cities with millions of people. And the second is that the economy will just come back to normal again with all the foreign investment, foreign trade, foreign tourists, and foreign businessmen visiting China as like 3 years ago. The economy would just go back to where it was. So the market has been really positive, and the stocks has been rallied quite a lot. My first position in my stock portfolio has actually rebounded by like 50% in just 2 months' time. That has been really felt by the stock market already.
Well, the economic sector probably they are reacting fast to the change of policies. Hannah, you mentioned about it depends on, and also Rick mentioned about it depends on the visa issuance by the Chinese Foreign Ministry. Obviously, like Financial Times reported that global investors are eager to return to China to do business. I mean, just as many regular folks, they want to come back and forth between China and other countries. Some, I would say, Chinese, the reopening, the impact probably is uneven on different parts of the world. But, on some close partners, for example, Australia, according to JP Morgan, that kind of impact could be huge, actually. In the prediction, they said that China's reopening could boost Australia's economy by 1% in 2023. That number includes a contribution of 0.5% from recovery in the country's tourism by Chinese tourists, and also the return of Chinese students, which accounts for 0.4%. So in total, 0.9 or 1% increase of their GDP growth in 2023. So that is quite positive, I would say, in terms of the impact on the global economy.
Yeah, absolutely. And I think so. I think there's two factors in terms of travel to and from China. Of course, visas are very important. Right now, there are tourism visas to China are not being issued as yet. We'll see when that will happen. But business, of course, is now available and has been available actually for most countries for over the last year. It's really been the quarantine which has really put many people off. I was one of those people that was put off for a while for going to and from China, but I was also one of, like Rick, one of the last few in quarantine before everything changed to make a visit to and from China for business. And I think it was actually very important, very useful. And I think there's many others who are like me, who are absolutely eager to come back and forth and be doing that just as we were doing prior to COVID-19, or living in China and being able to easily go back and forth to other countries for business and also for family. So I think all of that is going to be much easier, of course, and I think that then means a greater impact in terms of global economy. The other thing that really matters is flight resumption. Now, China has said that flights can now, each airline can have more than one flight a week, which is great. And for some operators, this is a really huge deal. Take Ethiopian Airlines, which had 5 destinations in China prior to COVID-19 and was reduced to one a week. Hopefully, that means that the Ethiopian Airlines can resume. And again, that will provide a big boon to African economies, African business people who can also now come back and forth to the continent. So I do think it is significantly promising for 2023, even if tourism doesn't necessarily resume to and from China. But again, and as was being mentioned earlier, the tourism effect within China, the domestic tourism, of course, will also increase significantly. I know most of my team are ready to travel all across China over the next year and take advantage of the opportunity to do that.
That's right. Well, Rick, you were nodding your head. I know at the beginning of not really opening, but in the U.S. and other countries, when the work to resume or back to normal, you would see that there's a demand for flights, for example. Well, there's a huge demand. Often the situation is that employment is like 85% probably. It's not meeting the demand of the consumption there. Probably the same situation here in China. You see that?
I do. In the United States, there was a story this week in the Washington Post that said that some travel agencies are starting to book tours for April for China. So that's when they think that the airlines will be up and running again. It's very hard still to get from the United States to China. I had to fly to Korea and then fly from Korea to China. But in terms of jobs, I mean, I think it will benefit the Chinese economy a lot, and it will benefit countries that rely on Chinese tourists and Chinese students. But I do think it will be a matter of time, and I don't think this is going to be the biggest part of the economic impact. I think the biggest parts will be on the global supply chains, and in terms of business deals, in terms of foreign capital investing in China and Chinese companies and individuals being able to invest overseas. I think that's what we need to be looking at in the months ahead. It's a little bit harder to predict than the tourism, which we know is going to happen because of the pent-up demand.
Mm-hmm. Well, Hannah, it seems you agree with Rick when he talked about the global supply chain. I know that when I was in Beijing in the middle of December, basically the peak of the infection, we do experience the shortage of hands. Even the delivery service was suspended or was delayed. For the first time, you feel like a personal experience, like, oh, the delivery is even impacted by the surge. You can see, I mean, not the global supply chain, it's a city supply chain there. But globally, with the reopening, can we expect it's actually a good thing? I mean, probably easier to resume or even strengthen the global supply chain?
Absolutely. I mean, what we have seen even over the past year, so at the beginning of COVID, of course, and as China closed and other countries closed and we had so many lockdowns, of course, there were major issues, not just in terms of the actual manufacturing going on, but also in shipping. The cost doubled, if not quadrupled in some cases for shipping. Containers were delayed. That's not necessarily a China issue because a lot of effort was made to try to make trade out of China as smooth as possible. But there were changes and there were challenges. There were some delays. There were ports that had to be closed completely, other ones reopened, etc. So now all of that does not, all of that efficiency can now be taken advantage of in terms of actual efficiency without having to deal with lockdowns. And hopefully that will mean that trade costs themselves will reduce. We've seen trade actually with China stay quite strong for certain regions. For the African region, for example, trade even increased over COVID. But nevertheless, definitely there were some suppliers who worried about, who saw delays. In the Caribbean, there were a lot of delays in particular. And so I think we will be able to avoid all of that, have much more predictability. And again, also in terms of making sure of quality of supplies and goods, for example, we'll be able to have business people who can come over and check the quality and the procurement of different goods. And that should also increase supply and reliability across the supply chain.
Well, Jiahe, if you look at the global supply chain, I mean, as Hannah rightly pointed out, for example, trade between China and African nations actually increased, and also trade with ASEAN countries that has also increased to a quite a large extent, actually. So at the same time, we have been talking about the global supply chain disruption, but with this opening, so hopefully things will maybe smooth out.
Definitely. I mean, I was actually in Sanya City during this summer when Sanya was locked down for a month, if you still remember that. And I met a friend in my district who well, two of them, one coming from England, the other came from Scotland. they were doing business in China. They got a job in, actually they set up a company in Chengdu, and their business was helping the British people to sign the contracts here because they can't fly over to China. It costs them like 7 days or 14 days. It's too much cost. So they grab that opportunity and they do this kind of business, helping you to sign all the contracts in China, visiting the factory sites, meeting people here because they are British and they are coming also from Scotland, these places. They know the local people there, so they do this kind of business. So from this small example, you can see that with the previous policy, it was really hard for businesses to come over to China. You got a lot of things. It's not only signing a check. You have to visit the factories, all the workers, all sorts of things have to be done. But now with reopening, the things will definitely get much better, maybe after like 2 or 3 months when everything goes back to normal, airlines picks up again. So yeah, I mean, when you talk about a global supply chain, building factories in China, things like this, it will be much easier in this year.
Much easier. I mean, it will be facilitated definitely by the reopening of borders. And also, I wonder, whether some of the development, how much does it have to do with probably with this whether COVID controls or not. For example, if you look at the number of the first 11 months of 2022, foreign direct investment in China, FDI, totaled more than 170 billion US dollars, up 9.9% year on year. The amount has already surpassed the total for 2021, despite the impact of COVID control measures. So it's about the Chinese economy. Yes, I mean, there's impact coming out of those controls measures, but at the same time, it's fundamentally about the economy, it's about the size of the market. Jiahe?
Yeah, definitely. I mean, when you look at how many, well, we always say last year was really difficult for us. Many cities have got locked down. But when you count the cities that has really been locked down for like 2 or 3 months, including like Shanghai, part of Beijing, like China District, Sanya. I mean, it's only taking like 5% of the population. Seriously, if they take up all the headlines of newspapers and websites, but if you count how much population has really been affected, that's about 5, maybe 10%. So the economy was still strong last year. That's why, as you mentioned, the FDI has actually been increasing. Another thing is that businesses always know the long-term thing. I mean, you don't invest, make your decisions this year and don't think about what's coming in the next 10 years. And when companies were making decisions last year, they know that China will open up one day. They don't know whether it's this November, next year, next summer, they don't know. But what they know is that maybe within 6 months or maximum 12 months, China will reopen. So you can't do your job by then. You have to do them in advance. And that's because China is, well, the second largest economy in the world, 1.4 billion people and customers, the largest consumption market in the world. So businesses have to grab this opportunity,
Mm-hmm. Well, Hannah, if you look at the Chinese manufacturing, we talk about the impact on the manufacturing. China is known as the world's factory, and now inside China, some people were worried about because of the impact of the COVID control and prevention measures, manufacturing was disrupted, whether that kind of reputation will be affected. I mean, certainly it will be affected, but it really.
Yes. Well, I think what we have to remember is that in 2021 and 2022, China was really, in many ways, even though it was very difficult with some of the lockdowns, and I think the point made about how little of the population in general was affected by the lockdowns. Yes, it was in different areas, but in particular because of the zero COVID policy, there was consistency in manufacturing and predictability in manufacturing. It was really the supply chain challenges that were there, and obviously things like port closures and so on, or shifts. So now the question is how to maintain that manufacturing output. And I think the idea of at some point there was going to have to be a removal of the controls. And having looked at the rest of Asia as well, I think there were some really useful lessons from, for example, Malaysia Singapore, and how they managed the reopening, which China was able to take advantage of, and Korea, which China was able to take advantage of to work out what is the best way of opening while maintaining manufacturing output and making sure that there is that continued predictability. So I'm not particularly expecting, and I don't think we have seen significant falls in manufacturing in China due to COVID necessarily, but nevertheless, it is something to be concerned about, but hopefully only for a very short period of time.
Hopefully, it will be a short period of time. Rick, if you look at the Chinese reopening and the expectation for the economic growth, for example, 5.7% for 2023, and then there's an impact, globally. Probably every part of the world will, feel the impact more or less. For example, Reuters reported that the oil price rise over 1% on demand optimism coming out of the Chinese reopening. So if you look at the situation in European countries, people expect more or less recession with the economies. The U.S., there's a bit uncertain, let's say, whether the Federal Reserve will continue to raise interest rates that will impact the economy too. But anyway, with now the second largest economy entering the arena, now growing again strongly, so that will impact, for example, the consumption of energy.
Yes, in fact, you've raised a lot of important and complex economic issues. I think Chinese manufacturing will bounce back. I think there are multiple questions. One is consumer confidence in China and the spending of consumers in China, if they feel good about the future. In the rest of the world, I think there's a recession mentality, even though a country like the United States is actually doing far better than the world at large, and the economy is doing better than a lot of people in the United States think it's doing. But I do think that China faces an international challenge of lack of consumer confidence outside of China, which could result in reduced demand and continued inflationary pressures, as you're saying. I mean, it's a complex circle. If the Chinese manufacturing economy improves, world oil prices could go up, which could cause more and more economic issues in Europe and Africa, in other parts of the world. So I think that we're just in for a rocky period in the year ahead. But I mean, I feel good both about the economy of China and the economy of the United States overall. I feel a little less certain about Europe. And the most important factor that's unpredictable right now is the Russian invasion of Ukraine. If that is settled, I think oil prices will be reduced somewhat, and that will probably help the global economy if that happens. But we have no idea if that will happen.
Mm-hmm. So, Jiahe, if you listen to what Rick has pointed out, it's actually, I would agree with Rick that probably for 2023, you do see the growth engine, if we call them growth engine, China and the U.S., both economies are expected to be strong in 2023, while European economies are probably a little problematic. So if that's the situation, so 2023 probably globally will not be that negative, as many people expect.
Yeah, I mean, if everything goes on as we are looking at it right now, it looks like we're going to have a pretty good year. It looks like the war between Russia and Ukraine is about to ease, which we don't know. I mean, it might last another 6 months or 3 months or 12 months, who knows? But it looks like it's not as serious as it was. So we really hope this war can end and can bring some confidence to the European economy and the oil price as well. And hopefully the COVID does not pose another deadly variant. That's a very important thing, because currently we do believe that the variant is going to be easier and easier, but no one can make 100% sure about that. No one can make a promise that, this thing will just go away. People have really been worried for the past 3 years. So that's lacking of confidence about where the COVID will actually pose some pressure to the global economy, that businessman does not really have that much confidence to invest, because no one can make this promise. We don't know much about COVID. We just feel that it will get easier. But anyway, from all the resources that we're having on hand, it looks like this year will be much better than last year.
But what about the challenges? I think Rick mentioned a little bit about consumers' confidence in China, or the confidence from the private sector in Chinese economy, in Chinese long-term policy making, and also if there's a weak demand for Chinese manufactured goods, so that will affect the export of Chinese economy, obviously. So all those will, be challenges for the economic growth for 2023.
That will be challenges. I mean, there has always been challenges for the global economy and Chinese economy in every single year. If you look at the past 10 or 20 years, every year you find problems, So this year we have serious issues like, for example, inflation, whether the inflation can be contained. That's a very serious thing because inflation is still ongoing around the world, not in the Chinese economy, but all over the world. You can see inflation everywhere. So that there will be challenges, and also the Chinese property sector, whether it can really pick up again. That's another thing that we're worrying. But the thing is that we're confident about the economy is because currently Chinese economy is still having a very large potential. That's something no one can really miss. I mean, China's per capita GDP is only $12,000 right now. So China, if you look at the long term, you think Chinese economy would be somewhere between 30,000 or 40,000. That would mean Chinese economy can still grow by another 200% or 300%. So that's a long picture thing, which means this engine will be strong for the global economy in the next 1 or 2 decades, I think.
Mm-hmm. Hannah, from your experience, and Rick probably too, there will be a new waves of infection. That's people's expectation, however large or small, because now you have a free flow with outside world. Of course, we are expecting new variant of COVID, of this Omicron or other new variant, new strain. That will more or less also disrupt our life, even production. Of course, we don't know to what extent. But based on your observation, your experience, like in the UK, Hannah, to what extent that will affect probably the manufacturing, the life of the people?
I'm currently in the UK where there are few restrictions, if any, completely up to people to wear masks and so on, and most people choose not to. I'm not one of those. But nevertheless, I think it's likely that you're absolutely right. It's likely that there will continue to be variants, and there will COVID-19 is not gone, although many people would love it to be gone, and all of us would love it to be gone. But I think there is a big push for normalcy. There's a big push for let's just get on with life as much as we can while taking some sensible precautions. And I think this is the advice from the WHO: continue to share data, continue to be transparent. There have been obvious major hiccups along the way, even with new discoveries of variants and so on, countries being punished for discovering new variants and so on through travel restrictions, etc. But I hope in the end, in 2023, we can be much more collaborative to try and make sure that we all share that data and try and find the new variants as they come, so that we can all tackle them together in a responsible way.
Mm-hmm. So Rick, of course, we are feeling a lot of optimism with the reopening of the borders. People, for example, the flights booking for the Spring Festival time, of course, is overseas flights from the Chinese consumers has increased more than 500%, compared with that of last year. A lot of, we're talking about confidence. There's a strong confidence probably in that sector of the society. But as we said, probably we should also be realistic. There might be new surges and new waves of infection.
Yeah, I think we just have to be ready for disruptions, but I don't think that any disruption will be like we saw globally in the first few months of 2020 or in China, like we saw in December into early January. I think that it's going to be manageable, but it's going to be unpredictable. So our lives may be upended temporarily for months. At times we can't predict going ahead. But I think that the world will return to a base of normal life. But I think we all have to remember that it's out there. A lot of people I know in the United States are acting. Okay.
Well, on that note, we conclude today's discussion. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.